Hey, good afternoon, everyone. Marty Mazora here. It is the 11th of April, 2021. Going to run through the technical analyses that I just got done performing on every one of our positions in our core portfolio. And then I want to touch on currencies for you as well. This is for those of you who I know enjoy the technical analyses. Before I jump in, remember the wind and the tide analogy. I think of the technicals as the wind, right? The price action blowing around, being inspired by sentiment, by positioning, other market structures, Fed policy, headlines, and so forth. But we're looking for long-term trends. This is just, people in action that as they act together in the financial markets. Again, we'll look at positioning on currencies as well, but this is just the daily chart. The blue is a down day on these candles, the white is an up day. The second panel, I think in one of them I have these backwards, but the second one is moving average convergence divergence. The third one is the RSI, relative strength index. And those are simply momentum indicators that can be pretty telling as they trend. So starting with financials, my drawing tool is set up for you here. You may recall last time we did this, I had drawn this bull flag right here. I'm going to change the color to offer some contrast. So that looks like a pretty good bull flag to me, right? You have a nice, very strong with momentum uptrend, a consolidation that points down a little bit. Plus you had this trend line right here acting as support. So a technician would tell you to look for a breakout to the upside and then a move that equals the flagpole, right? So if that's true, financials have a nice run ahead of them. And they make up about 12.5% of our US stock exposure, so it's not insignificant. The other thing that's interesting or bullish here is right here we had a bullish crossover on the MACD. That's just a short-term signal. Looking okay on the RSI, so we're not overbought. We have a nice trend in here, nice momentum. This makes sense relative to what we've been seeing in the backup in treasury yields. Higher interest rates are bullish for banks in particular right here. So that's the one thing that may actually defeat this pattern right here. And looking at bonds and looking at our technical analysis of bonds, and also while this may fly in the face of some of the things we're seeing and expecting in terms of the data, I'm not so sure that the robustness is going to be quite what's anticipated as the economy opens up. I do think there's going to be some pretty dramatic moves, partly because the base effects of a year ago in terms of the data, where things were versus where they are now. But the market is clearly pricing in perfection, and that's both on the fixed income side and on the equity side. So if in the bond market it's overdone it a little bit, we're going to see a rally in bonds. In fact, if you look at futures positioning, that's what's expected. Then we're going to see yields come down, and that might put some weight on financials, although financials can also just benefit from the impression that the economy is going to come roaring back. So financials, which includes, big Wall Street brokerages, insurance companies, and so forth, banks, independent. Oh, by the way, 9 is in it. One asterisk means that's an improvement week over week. That's a very bullish score, technically. KBE is just the banks ETF. KBE, as you can see, held this trend line right here. By the way, this red line is the 50-day moving average. So we have, double support right there. Sure enough, came down, tested, bounced off of that a little bit. We don't have, the bullish sign right here. We don't have a buy signal. We're still on a sell signal, although it's threatening. That's what this histogram tells us. And then, it looks like a little bottoming in the RSI. Nothing earth-shattering here on this chart. I'd say fairly neutral. 7 though is a net bullish. Of course, these rising wedges, right, against either flatness or negativeness down here. That's longer term. Those aren't sell signals, but those are signals that suggest that this rally may not be, long for this earth, as they say. But again, we need something to break down. So you would say right here, this was a real negative as we broke down below that wedge, but then we caught that support line right there. So again, lots to play out going forward. Okay, so tech, right? Tech It looks like a bottoming pattern right there. We had confirmation down here. Completely lost the uptrend line, tested it, failed it, tested it, and then broke above right here. So that's bullish. That's kind of a bullish breakout back into, or above this this trend line. However, it takes it right back into this wedge pattern, which longer term, particularly with these pretty dramatic divergences, is not a bullish sign. However, this move here, nice buy signal in here, prompted me to give, at least for now, a technical score of a pretty high, pretty strong 8. So that suggests technically that this looks pretty good. Volume wasn't so great, you can't see that here, but I have to score that as a positive. Longer term, we still should be very concerned about the prospects for the tech sector. Industrials. I like industrials. I like the fact that, I like industrial stocks when the world's going to spend $1 gazillion in the next few years on infrastructure. We still have a very ominous kind of an upward wedge here. We still have the bearish divergences. We actually have, a buy signal that's dying right here. And nothing too great. It's a 7. Kept it as a 7 week over week. We'll see how it plays out. Still good upward sloping 50-day moving average. So nothing to panic about here, but nothing to get too excited about in terms of upside potential, at least not for the moment. Technically speaking, I must always qualify. Materials, you gotta love materials. If you look at where the government oomph is going to be focused going forward, but we do have a fresh sell signal right here on the MACD, short-term stuff there. We do have, we are wedging higher against bearish divergences, same kind of stuff. I downgraded materials as much as I like them fundamentally in terms of the tide. The wind is blowing against them. So right now on a shorter term basis, got to bring it down a notch. Score is 6. These are 1 to 10 scores. Okay. The healthcare, interesting setup, interesting dynamics, fundamentals for healthcare, and we can talk long term about demographics and things, of course. So we bounced back here. We ultimately held this support, tested it, came up against that, have some resistance to contend with right there, closed just above that this last week. This is still kind of hanging in there. Down here. We were at a 6. It was a negative. So coming off of here, bouncing up and just closing above there, why not? Give it an upgrade to a 7. Not a huge part of our allocation, but certainly there. It was, of course, a big part when we thought the economy was about to roll over a year and a half ago. But right now, we like owning healthcare. There's decent value there, and so on. A lot of volatility, of course, like just about everything else. The staples, okay, right, you got to eat staples. We drew this bull flag here last week. I think it's decent bull flag. Flagpole's kind of squiggly. Look like we're breaking out of that. Come back, test that a bit. It's going to have to see some acceleration here for that pattern to mean anything. Still, look very toppy in terms of the momentum indicators, rolling back over from an overbought position right here in the RSI. Kept it at a 7. Utilities, very interest rate sensitive. Remember, interest rates were rising in here. Look at utilities kind of coming back. Broke, tested the 50-day moving average, broke above our divergent high line here, fighting that resistance right there. A little bit of rolling over here. So, not a super compelling chart. Looks like a real consolidation phase in here. So we'll keep scoring at a 6 until we break out meaningfully in one direction or the other. Energy, I like energy a lot going forward. However, had to downgrade the score to a 6 this week. You can see, the divergent high against, not a high there and not a high there. Nothing. I've seen more bearish charts, of course. This is kind of a bullish looking here, although it does look like we're breaking back down here. Couldn't get back above this little minor trend line, tested it and lost it. Right now, though, I would say you could be somewhat encouraged because you have double support here. You have this right here from this high. You have that as a support line along with a 50-day moving average, which is the red line that continues to slope up. Nevertheless, downgraded it. We'll see. Could very well break down below that, could bounce back above that. Kind of like energy here from a tide perspective, I think, going forward. Okay, oil services stocks, right? So same sector, but these are the companies that will help bring capacity back online as the economy continues to pick up. So the fact that we gave up, just struggled right here since our last talk with the 50-day moving average, and at the end of the day on Friday, gave that buck up. We could test this trend line right here. Somewhat of an ambiguous picture back here in some of the momentum indicators. So yeah, nothing to write home about, nothing to panic about. Fundamentally, something we absolutely want to own and be patient with right here is our current thesis. Eurozone actually outperforming the US so far this year. If you didn't get a chance to, by the way, please be sure and read the Friday's macro update. I actually spent some time on stocks and the relationship longer term between the U.S. and foreign stocks from a valuation standpoint, from a relative return standpoint, and from a dividend income standpoint. So I do like foreign right here equally with the U.S. if you look at our allocation. So, but we do have our upward wedge, like we do in most other places, and that's bearish against momentum indicators that are rolling over to some extent. The fact that we've been able to hold this trend line, though, wouldn't surprise me to see Europe break out to the upside. A lot of potential there. This looks fairly optimistic in here as well, keeping it as a 7 for the moment. Asia Pac, Asia Pacific stocks, developed markets like them a lot. Going forward, holding this trend line, holding the 50-day moving average, new short-term buy on the MACD, threatening to break out of this this downtrend in the RSI. Lot to like on this chart, lot to like fundamentally. So we give it a 7 and upgrade it from the last time we did this analysis. Emerging markets, 10% of our portfolio. We have emerging markets and India. I just realized, I apologize, I didn't update the India chart. I'll do that for you next time. But this is the Vanguard ETF that we use. It tracks the MSCI Emerging Markets Index. That's the way to play this if you want to play it in broad fashion. Like it a lot fundamentally. Technically, not so much. Couldn't quite hold this. It's testing. I'd say it's battling still with the 50-day moving average. You can see it lost that uptrend line. It's not quite, it's kind of losing it as it becomes resistance. We do have a down sloping wedge, right? A downward wedge or a falling wedge. That's bullish if you can get bullish divergences here. You kind of have those here as well. So despite that last part, and despite that little buy signal there, I still downgraded it to a 5 week over week. Gold. Gold's been a tough place to be. Gold has really been weighing on our core portfolio's relative performance, I guess, relative to whatever you want to score it against. Folks, we're a macro firm, so we can talk about stocks like everybody else does, but frankly, if you'll forgive me, we really don't care. We're not a firm that buys stocks for the sake of owning stocks. We are a macro-driven asset management firm, so we can go anywhere and everywhere. And gold, you gotta like it relative to what the powers that be have to do to keep these bubbles afloat. And there's just no other way of saying that, frankly, in my world. But what's going for gold? We've had this sell-off. We peaked, last summer, right? So we have this very distinct downtrend for sure. We also have a falling wedge pattern, which is very bullish, and we have some positive divergences building in here, which is bullish as well. And what looks like may be happening is finally breaking out of that falling wedge. Did test and did not hold the 50-day moving average, however. So that would be a negative. This is a bullish look here in terms of momentum. So we'll see how it goes. Looking at futures positioning, gold looks pretty compelling to me as well. Don't know how long this downtrend is going to last. As long as the fundamentals and general conditions say what they're saying, and the Fed, et cetera, is going to attempt to do what they need to continue to attempt to do, gold has to be a noticeable part of virtually any smart portfolio. So it was this breaking out of the wedge gave it, or inspired me to give it an upgrade to a 7. Gold miners actually look a little more constructive, right? We broke out of the wedge. The same thing was there, folks. We were in these things last time we talked. Broke out and broke above and seems to be holding for a moment the 50-day moving average. And looks like we're getting some momentum here in our momentum indicators. So gold miners getting a good, really good play, really good way to play gold, I think, right here, and probably will be for a while going forward. Silver, right? Gosh, if I had $1 for every time anybody's asked me about silver over, say, the last 3 to 5 years. So silver, interesting, right? Not an upward wedge, right? A kind of a symmetrical triangle here when you look at all my noisy lines. You could argue here, right? Definitely that we've got a falling wedge, which is bullish, and we're just now breaking above that. Couldn't hold the 50-day though. That's a near-term buy signal. So we were pretty lowly scored here on silver, which you should like a lot if you look at where the regime is headed going forward. So did upgrade it to a 5. Lots to play out still. We'll see. Going to be volatile in commodities and everything else going forward for a while. Ag, like ag a lot. Ag's been really good to us since we bought it last fall. Literally, we bought it right in here as it paused. So we've had a really good run. Like all commodities, this has been a drag on our relative performance. Came back, but bounced and really came through with some momentum. Our potential downward wedge or downward trend line here. I could wedge it there and say that's bullish. Still have some resistance right on that line that goes back all the way back here to February 2019. Nice short-term buy signal with a lot of momentum in the MACD, a lot of momentum here coming off these lows. So yeah, ag looks pretty compelling right here. Should, I think, for a long time going forward. Okay, metals. So your futures in things like copper, nickel, ore, that's iron ore, that sort of thing. So there's our bull flag that I said looked like it wasn't happening. We could still say it's intact barely, maybe, right? Did break out to the upside, had some pretty better action here, almost a buy signal right in here. This is threatening that. Yeah, we'll see. Was worth coming back up to a 6 though. I mean, it was an impressive move here. Just about bounced off of the 50-day. Gotta like metals if you like what's going on in the global infrastructure. Part of the problem here is China's been kind of cutting back a little bit in some of their support of their economy. So we'll see, but like it longer term for sure. Metals miners, not the place to be 10 years ago. Definitely the place to be, I think, fundamentally right here. So you could do this right here too. We do have an upward wedge, which is bearish. You can see the fighting to gain back that trend line right there. Did survive a test of the 50-day moving average, which is still pointing in the right direction. That, however, is a short-term sell signal. See how that plays out. Dollar's a little weak right now in Sunday trading, so that's bullish if it stays that way. But with this just kind of lingering right here, and then the short-term sell signal had me downgrade that one week over week. The yen, remember last year when the world was coming to an end, our yen position, we had a little more of it then, went the opposite direction, right? That's as expected. That's when stocks fell apart. So yen is a very defensive position to own. We don't own much of it. It's just 5% of our commodities exposure. Like everything else in the world, though, seems like almost. you had this rising wedge and you had these bearish divergences, and sure enough, you broke through that just like you're supposed to, right? But you may recall last time I pointed, we were well in the throes of this falling wedge down in here, and I upgraded it last time because I showed these bullish divergences against the falling wedge, and look, lo and behold, we did bounce out of it last Friday with some pretty good momentum. So that looks really constructive to me. If I were a short-term trader, I might be going long in a big way at the end, but it's just a longer-term position that we hold right now. We don't hold a ton of it, so at the margin, it'll help. And so this didn't kill us when it came falling out of bed. 7 definitely deserves that score this week. Verizon. Boy, did we have a nice looking bull flag pattern developing right here. I mean, that's just kind of classic. It's a high, really tight flag in there. Nice big move. Broke out of it perfectly. Should come right back up to here and get just a big move above these highs right here, right? That's, you would say, and you had the momentum, you had everything going for you. And then you had the stimulus plan news come out, right? And yeah, they're gonna apply $100 billion towards expanding broadband, but they're gonna do it out in the rural areas that Verizon just isn't in, right? So, while it's a great 5G play and it pays a tremendous dividend that I like to have in our portfolio, that was just really bad news, and you can see that the market was very disappointed. We had a gap lower that I suspect will be filling at some point in the not too distant future, and a testing right now of the 50-day moving average. So I had to downgrade it a bunch. Am I worried about Verizon right here as part of our long-term positioning? 5.5% of our U.S. stock exposure. Unequivocally, no, at least not right now. Of course, if this broke down and the fundamentals began to deteriorate a bit, well, then of course we'd have a different conversation. But this, I understand where that's coming from. Would be a buying opportunity if we didn't already have enough of it already. AT&T. I love it, frankly. Why in the world would I say that? It just can't seem to get off the floor from last March, right? 7%-ish dividend, if you will. Same story for AT&T. Basically, I just repeat myself what I just said about stimulus and Verizon. Short-term sell signal there, gap lower, going to test that 50-day moving average. Buy AT&T if you don't own it, if you're just watching, if you're not a client, and just forget about it. Tuck it away and leave it alone. It's not going anywhere. You could argue it's the most indebted country in the world, or company in the world, and all these kinds of things, triple B rated debt. Too systemically important, and probably a really smart play based on where positioning is going forward. And again, folks, I say stuff like this because that's the scenario today. The minute that scenario or our thesis or our assessment changes, and of course I'm going to tell you something else about anything, whether it's AT&T, gold, or financial stocks. Okay, solar companies. We entered them small, and we knew we were buying at a high. That's why we went small. Yeah, I probably don't need to talk a lot about why. Probably want to have some exposure. It's just 2% of our U.S. stock exposure so far. See, we came down and tested that low, but we had positive divergences here. That's very bullish. Started to play out. Not so much here. Not doing well. Not a constructive looking 50-day moving average. We'll see. At some point, I suspect these things will pop to the outside. Could they up to the upside? Could they go lower? Sure, they could. Nothing better than a 5 is deserved right here. Wind, fan, right? Not bad. Constructive, more constructive than solar, right? And you tested, you lost the 50-day, then you came back, and then tested it and survived it, and some really strong looking momentum in here. So I kept wind at a 6 week over week. Water, big part of the infrastructure spend going forward is going to be redoing water infrastructure. Kind of like that. This one, we bought at a high and now it's going higher. Would love to get some correction going there and maybe add a little more to this position. We'll see. We may not wait for that, but recapturing maybe. this trend line definitely survived a test of the 50-day moving average. These are, negative divergences, so that's a divergent high, of course. That longer term look that just says, at some point, folks, we just may see the stock market roll over and take just about everything with it for a while. And that's what those wedges and those divergences say could happen. MP Materials, really the only investable rare earth minerals play in the U.S. If you really knew the dynamics around the relationship with China to rare earths and so forth, that this is just a narrative you have to love. New company, newly publicly traded company, looking great. It's broken down here of late, lost its 50-day moving average, trying like heck to recapture it right here. This is looking more bullish up in here. Went from a 4 to a 5. Again, nothing crazy from a technical perspective. Do you want to own rare earths given the push towards ESG and all this going forward? Well, of course you do. And with the issues that the world has with China, if you have an alternative, because they used to have a lock, still pretty much do, but if you have an alternative in terms of access to rare earth minerals and you can get it from MP in the U.S., this looks pretty special on a longer term basis. Uranium, yes, the new administration is embracing nuclear energy going forward. Uranium miners look very compelling to me. The metal itself looks compelling. It's 50% off from where it was in 2011. Not nearly enough capacity against what's probably going to be a rising price. Pretty bullish stuff going on in here. 6 for our small so far uranium exposure. And then last but not least, Albemarle, the U.S.'s biggest lithium miner, world's biggest provider to electronic vehicle marketplace, the batteries and so forth. So we waited on this one. We just added a position as it was getting beaten down. Small position, could add more. We'll see. It's not surviving so well. Tested the 50-day, could not keep it. Got some support right here. Not so good looking down in there. That's a red circle. That means a new sell signal. If we got a nice, good, substantial breakdown, I would love this thing to drop back to $100 a share. Yeah, we'd take a hit on that small position, but boy, we would probably really make it more substantial if we can get some pullback. And we may anyway. We'll just see. Right now, I'm not compelled to add more, but I do like the story. The tide for lithium, of course, is quite strong going forward. Okay, I'm going to scroll up to currencies and let you go. So if there were only one macro variable in the world that I could focus on, it would be currencies, and I think we do just fine, frankly, just focusing on currencies. So again, as I keep reminding you, right in here, we called the bottom on the dollar perfectly, right? We had a falling wedge. We had the divergences. These indicators tend to work really well in currencies, right? So we broke out of that, and then you may recall, folks, last week I said we're in a rising wedge, and the world was bullish the dollar, but not us, right? And again, we were in here and we had a buy signal there. Well, since we did that video, it's now a sell signal. We rolled off of here. Remember, I showed these overbought levels. So right now, we're looking pretty smart. Of course, this could change in a heartbeat next week. But technically, the dollar was ripe to roll over. And I said that's probably going to be very good for stocks. Stocks had a really good week last week, particularly tech stocks. You may recall I said especially tech, right? And so here we are. And longer term, I'm very bearish the dollar, which makes me very bullish commodities. To some degree bullish stocks, but the stocks I think make sense, in the commodity space. Materials, foreign stocks will do really well in a weak dollar environment as long as the world isn't coming to an end. So in terms of, you always want to look at futures traders positioning, right? So the world was getting bullish the dollar, right? And again, we were getting bearish. You can see that bullishness has come off a little bit week over week right here. Yeah, so I love it when we have one perspective and the market is on the other side of our, well, right in here when we were bullish, right back in here where I said things are bullish. Look, the market was bearish, so they had to cover those shorts when they turned out to be wrong, and they exacerbated the upside there as well. The euro is basically a flip of the dollar because the euro is the biggest counterweight to the dollar index. So we had this falling wedge here. So I was basically saying this is a very bullish, so much so I even put that wedge in green, right? And then you had the bullish divergences. Sure enough, you have the euro breaking out, struggling against the 50-day moving average. This is just going to be, an opposite look to the dollar. So obviously, if I think the dollar is going down, near term, I think the euro's probably got more upside to go. And then futures positioning, bullishness. However, waning bullishness, right? So again, pretty soon, if this keeps up and I remain bullish, then I'm going to have futures trader support if I'm right, and they have to cover those positions. The yen. Again, you may recall, folks, we were deep in this falling wedge last week. We were right here testing the bottom, and I said that's bullish, right? Plus we had the divergences. Sure enough, just a few days now. Again, I act like I'm so smart here. I may look like an idiot next week, but right now, technically, the yen's looking pretty compelling to me, and we have a little position there, as I just explained. Very bearishness on the end, that supports my bullish case, right? So if this continues, these folks are going to have to cover, and that's going to shoot the yen up higher as well. The pound, we were 100% bearish the pound right up here as it was just getting way, way, way overbought, right? And of course, you had the divergences building. So yeah. I'll confess, in my very speculative account where I'll trade these things, that I went short the pound, and that was a nice little run there. So we'll see how this plays out. If the dollar gets weak like I expect, well, then this trade could reverse, and we could see some upside. Right now, it's still fairly bearish, the pound. That we could see that trade lower. Folks are expecting a turnaround there, a little less so here lately, but they're expecting the pound to pick up speed, and I could see that happen. UK stocks actually look very attractive to me. If that's true, and the rest of the world sees value in the UK economy, notwithstanding COVID issues and so forth, and anything else they're dealing with Brexit and so on, a rush to UK equities would be bullish for the pound as well. Two more. Australian dollar, here's your commodity currencies, right? So this is going to have a real close correlation to our commodities exposure. So, we had a kind of a bullish look there with the falling wedge. Broke out of that, but not with any kind of really conviction. We had a small buy signal right in here. So we'll see. So if I'm right about everything else, then the Aussie dollar is going to go up, and so is our commodities exposure. Futures traders on balance, at the margin, agree. Canadian dollar, the other commodity currency that will feature here. We do track a lot of other ones, but these are the ones I feature on the spreadsheets. So Canadian dollar saved itself at its 50-day moving average, fighting to get back to that trend line right there. A little bit of, maybe some positive going on there. Again, this just speaks to me from a commodities allocation standpoint. Loss of optimism here, among futures traders. They're still net bullish, right? They still think that there's on net. These are the people. So what we do here with these is we take the speculators. This gives us the net long or the net short position. More futures traders are long, betting on it rising, than short, but just barely, right? So I love it when you get to an extreme here, because when shorts cover, they got to buy, and you're bullish on something. That's a good way to trade certain things if you're right. But futures traders could very well be right. And I'm pretty much on the same page with them right here, although there's not that many of them on a net basis who are bullish. So folks, I keep thinking I'm going to keep these shorter. That went 35 minutes. I'm going to edit it, so maybe it'll be less. Lots coming up. Please stay tuned on the written blog, the macro message that I put out Friday. I think that's a really important read, particularly for clients. You're the ones who we want reading those. Thank you as always for watching and listening. Talk to you soon. Bye-bye.